As a Canadian income-focused investor, I'm always on the lookout for new funds listed on the Canadian stock market or the TSX that are designed for income rather than growth. So we got some pretty good choices, but definitely not as much as our American friends to the south, as they have the biggest and best stock market in the world. But we have some great options when it comes to funds and ETFs that use the covered call strategy, which is my portfolio's bread and butter. The covered call strategy, of course, is a zero risk income enhancing strategy. So to my surprise, a brand new covered call ETF just came out by a fund manager called Hamilton ETFs, HDIV, that is the stock ticker. So this is a smaller and lesser known fund manager who really specializes in the financial sector. But to my surprise, they came out with an absolutely genius ETF. Unlike other covered call ETFs that hold single stocks or individual companies, this ETF holds 7 covered call ETFs. So that's right, an ETF that holds other ETFs instead of individual companies. So it's like getting 7 covered call ETFs in one. Simply amazing. So we'll check out this new ETF in detail in this video, and I'll give you my thoughts on it. Should you buy some shares now or wait a little bit to see how it does in the next couple of months? Did I personally buy any shares yet? So I'll answer all these questions in this video right now. So here is the ETF, guys. I'm on Hamilton ETF's website. So it's called the Hamilton Enhanced Multi-Sector Covered Call ETF. Pretty long name, but the name actually says it all. It's enhanced because of that leverage, which we'll see in a second. Multi-sector because it covers a lot of sectors, and it's really a covered call ETF at heart. So the ticker symbol is HDIV, HDIV. Keep in mind, for my American viewers watching, this is a Canadian listed fund. So it's listed on the Toronto Stock Exchange, and as you can see, the target dividend yield is 8.5, and this is really a brand new ETF, guys. It actually started trading just a little over a week ago on July 21st. So what is this ETF about, guys? Well, let's check out the highlights here. As you could see, the target yield is 8.5%, which is really nice, really high. Think of this as your an annual interest rate. Think of dividend yield as an annual interest rate, with monthly distributions, which is also always great for income investors who want passive income every single month. So this is actually based on an index called the Multi-Sector Covered Call ETFs Index. They pretty much have indexes for everything nowadays anyway. But the important part here is that it's an equally weighted portfolio of seven sector covered call ETF. So we'll check out which ones they're talking about here. And another thing I want to point out that's important is that it has modest leverage of 25% or 1.25x. So this enhances not only the yield but also the growth potential. So this is a good fit, like they say here, for investors who want attractive monthly distributions. I like it. Broad sector diversification, which is great. Increased growth potential versus individual covered call ETFs. That is because of that leverage, and higher yielding alternative to the broad based index ETFs, which of course is true, right? They're broad based index ETFs is stuff like buying the whole stock market, like the S&P TSX 60 on the Canadian stock market, or the S&P 500 on the American market. So the objective of the fund is to seek or to replicate 1.25 times multiple. That's the leverage, right? 1.25 leverage of the Solactive Multi-Sector Covered Call ETFs Index. I can't believe there's an index to follow this. So it's comprised of equal weighting of 7 Canadian listed sector covered call ETFs. So there's some really good articles here, which I suggest you read. Of course, I'll put the link in the description below so you could read up a little bit on on the actual article. There's an official Globe and Mail article which goes into the fund and an overview, but I'm basically going to be covering that. So stock symbol HDIV, the current NAV 1655, and the yield's 8.5, but we don't really know the exact yield because the first distribution did not come out. So this is where they actually compare the that index that it's tracking to the S&P/TSX 60 index. So whenever you see this here, S&P TSX 60, it's an index that basically follows the 60 biggest companies on the TSX. So it's like the whole Canadian stock market. And what they're saying here is that the ETF is the index that this ETF is based on is actually beating the overall Canadian stock market. Not really surprising. The Canadian stock market has great returns, but definitely not as high as the American. So here is the sector allocation. Now let's get into the good stuff. So 14% banks, 14% utilities, healthcare, technology, insurance, gold, and energy. So this is my favorite part for sure of this fund. It's the sector diversification. Absolutely incredible. So how do they get this diversification? Well, look at the funds that it holds. And if you're a longtime follower of mine, you know that these covered call ETFs, or most of them, are staples in my personal portfolio. I actually own most of them. So you have ZWB, which covers the banks, ZWU, the BMO covered call utilities, which covers utilities. For healthcare and technology, you have two from Harvest, HHL and HT8. So there's your healthcare and there's your technology. FLI covers insurance. So there's your insurance. And then NXF is for your energy, and HEP is for your gold producer. So an awesome diversification here, guys. And we'll here there's further details, how much assets there are. So right now there's 6.4 million. I went back yesterday, I think it was 3 million yesterday. So it will keep climbing. It's a small fund because it's pretty new, and the distributions are monthly, and the management fee is actually pretty good considering that this fund uses leverage. It's a really decent management fee of only 0.65%. And one thing I want to point out is that the administrator of this fund, although it's managed by Hamilton ETFs actually partners with Horizons ETFs. So Horizons ETFs is the brother company of Global X on the American side, which has QYLD and RYLD. So these guys are really experts when it comes to covered calls. So one thing I want to do really quick, guys, is show you each one of these funds and what they hold, because you might be wondering, okay, well, what kind of stocks are in these 7 ETFs? So, well, let's go through them one by one really quickly. And as you will see, these are very conservative stocks. These are all blue chip stocks, guys. So it's very conservative investing. First one, ZWB, is the BMO covered call Canadian banks. What does it hold? The big 6 Canadian banks. As simple as that. You have CIBC, BMO, Royal, National Bank, TD, and Bank of Nova Scotia. So this fund holds the 6 banks and writes covered calls on it. The next one, utilities. You guys know this is one of my favorite covered call ETFs of all time and one of my favorite sectors of all time, utilities. So when you think of utilities, think electricity, telecommunications or telecom, and pipeline companies. So if you go in holdings and actually check sector here, so we could see each sector, we could see what kind of companies are in this ETF. So you have the best of the best here, guys, in not only Canada but in the US as well. So you have Enbridge, you have Pembina Pipeline, you also have TRP, Trans Canada Corp. So there are the 3 biggest pipeline companies in Canada. Then you also have some telecoms, of course, like Rogers, Bell, and Telus. And then you have a bunch of utility or electricity companies, not only in Canada, but also in the US. So Fortis is a big one in Canada, Duke Energy, Exelon, Southern Co, PPL. These are all in the US. Verizon, of course, is a telecom in the US, as well as AT&T, Hydro One, Emera. Emera is a big one in Canada, Algonquin, and you have a bunch of other ones. So really the best utilities in North America, ZWU. HHL is where you get the healthcare exposure. So if you go to overview here, you could see what kind of companies are in here. Here are the holdings. So you only have the big guys here, no small players. So you have Abbott Laboratories, Bristol Myers, AbbVie, AstraZeneca, Eli Lilly, Pfizer is in here. So it's all healthcare companies that you will definitely notice, especially now because of COVID-19. We know them all by heart, right? Pfizer, AstraZeneca, Moderna, etc., etc. The technology one, HTA, this has all the biggest technology companies out there. So you'll recognize a lot of them: Nvidia, AMD, the chip makers, Intuit. These guys make software for accounting, Fortinet, Adobe, Facebook, Alphabet, which is Google, and I know for sure that Microsoft and Apple is in here as well. This is just the top 10. Oh, we could click on next. There's Apple, Visa, Oracle, Intel. So it's all companies that are the biggest technology companies. Next one, FLI. So this covers the insurance here. FLI right here, insurance. So FLI I like it. It has 10 companies. It's the 10 biggest life insurance companies in North America. So if you just click on holdings, you could see what those 10 are, and you'll recognize a few of them. In Canada, of course, Manulife, Sun Life, Great West Life are the biggest three, and then the rest are all in America. So MetLife, Prudential, Lincoln, etc., etc. NXF is where you get your energy. So this one here, right here, energy 14%. So this one has, like the name says, energy giants. It has the 15 biggest oil and gas producers out there. So companies like Shell, Chevron, ExxonMobil. From Canada, you have Suncor, you have Canadian Natural Resources, you have Total from France, BP from the UK, Equinor from Norway, etc., etc. There's a bunch of other, Enispa from Italy. You have Petróleo Brasileiro from Brazil. So all the biggest oil and gas producers globally. And last but not least, where we get the gold exposure is with the HEP ETF from Horizon. So this ETF holds the biggest gold or precious metal producers in the world. So you have Newmont, Franco-Nevada, Royal Gold, Wheaton, of course, is a big one, Yamana Gold, Kirkland. So really all the biggest, the best in the world. So this, in short, is what HDIV holds. It holds the 7 covered call ETFs that we saw one by one. So these are all blue chip stock, guys. I want to make sure that's perfectly clear. This is conservative investing, and thanks to that modest leverage, and it's not much leverage, but thanks to that leverage, we have a nice 8.5% distribution yield. Simply amazing. So there you have it, guys, the first ETF of its kind. Because of the leverage that it uses, the modest leverage that it uses, this ETF does remind me a lot of split share funds, although split share funds typically use higher leverage. But of course, one thing that most people fear and dislike about split share funds is really the distribution policy or the dividend policy, where the unit NAV, the unit net asset value of the fund, needs to be over $15 for the distribution to be declared and paid out for that month. So because of this rule for split share funds, it's very possible to miss some dividend payments during market volatility or market crashes. So if you have no idea what a split share fund is or what I'm talking about here, make sure to check out my split share fund videos. I even have a specific YouTube playlist on split share funds, and by the way, also on covered call ETFs if you want to learn in detail what those are as well. But this new ETF, guys, is not a split share fund, so I don't expect there to be any such rule in place. However, we can't really say what the distribution or dividend policy is yet. Because it's a new ETF and they didn't even declare their first dividend yet, right? We know they intend to make it monthly, which is great. We know that they're targeting an 8.5% yield, which is also great, but that's pretty much all we know. Will the dividend or distribution fluctuate every month? Will it be based on the fund's NAV and reset monthly? We really don't know yet. So this is why, guys, I wouldn't suggest for you to pile in a substantial amount of money into this ETF yet. We should monitor it for a couple of months to see at least how the dividends will work, in my opinion. Personally, I did invest $10,000 into this new ETF to start out with, which for me is less than 2% of my overall portfolio. So it's a small amount. So we'll see how it goes, but I'm pretty optimistic that this new ETF will might definitely be a rising star in my portfolio going forward. So like all funds that I invest in, guys, this ETF is really designed for long-term income seeking investors. It's not designed to buy low and sell high later on like a growth type of investment. We buy it, we hold it long term, and collect that sweet income every single month along the way. So I'm absolutely stoked that new products designed for income investors like myself are coming out. Could it be that my income style of investing is getting more and more popular? We'll have to wait and see. But hey, nobody is better than at waiting than I am. It's pretty easy to wait, especially when you're making passive income every single month. And I know many of you watching are nodding your heads in agreement with me. As always, please support me. Please support this channel by hitting that like button. I would really appreciate it, guys. It's free for you and it helps the channel grow, so it's a win-win. Also, make sure to check out our website, passiveincomeinvesting.ca. That's where you could purchase my digital product, the Ultimate Dividend Passive Income Investing Package, which is all my years of research into the best funds, all in a couple of spreadsheets there. Whether it's for growth, whether it's for income, this product is really designed to help you build your own portfolio according to your needs, whether it's income like me or growth style as well. It also has sample portfolios, some for Canadians and some for Americans as well. So this product is also great for Americans as it has a bunch of funds on the US stock market as well. On my website, you could also book a one-on-one consultation service with me personally. However, all my appointments are completely filled out or sold out for August and September. So I'll let you guys know via a community post when the October appointments will be open. I appreciate your patience and hang tight. I will try to keep making more and more appointments available for you guys. Finally, make sure you're subscribed so you don't miss out on my future content and community posts. Like I always mention, I do a survey of the month every single month so you guys, the viewers, can vote on what topic you want me to cover next. And all you need to do in order to vote is to be subscribed. So we're also on social media. We're on Instagram. We're on Facebook. We have a Facebook group that's growing, over 2,000 members now, which is really, really cool. So we have a nice little community there. You could ask your questions and, people respond right away. It's pretty cool. I really enjoy seeing the conversations there. And the mission of this channel, my mission, will always remain the same, guys. It's to help everyday normal people invest on their own in order to build their own stream of passive income so you could enhance your quality of life and one day become financially independent like us. That is the best thing ever that you could accomplish. Trust me on that. So with that, take care, guys. Stay safe, of course, and see you next time.